Welcome to VeriScope News. We provide verified news and clear context. Our reports prioritize clarity over emotion. We focus on structural developments and long-term trends. This is a neutral analysis of current global events. The global financial landscape is entering the new year with several significant developments. Investors are currently monitoring changes in international relations and domestic economic data. These factors often influence the stability of markets and the direction of fiscal policy. The start of 2026 has brought an intersection of geopolitical shifts and scheduled economic reporting. Understanding these elements requires a look at both the immediate news and the underlying data. Markets typically react to new information regarding energy production and labor health. We will examine the specific factors currently affecting the financial outlook. This includes a transition in the management of a major oil-producing nation. It also includes the first major labor report of the year. This context is essential for a clear understanding of the broader economy. The U.S. government recently announced a significant change regarding the administration of Venezuela. Following the capture of Nicolás Maduro, the United States stated it would exercise temporary control over the region. Venezuela is a nation with substantial oil reserves. Changes in its governance are closely monitored by global energy markets. Analysts are observing how this transition might affect global oil supply and pricing. At the same time, domestic attention is focused on the upcoming January 9 labor report. This report will detail employment changes for the month of December. The current expectation is an addition of 55,000 jobs. This followed a period of softening in the labor market observed throughout late 2025. Furthermore, the U.S. Supreme Court is expected to rule on matters related to trade tariffs. The administration is also in the process of selecting a new Federal Reserve chair. These leadership and policy decisions occur as corporate earnings season approaches. Major financial institutions will begin reporting their fourth quarter results on January 13th. To understand the current environment, one must look at the performance of the past year. The S&P 500 grew by 16% in 2025. This followed 2 other years of significant growth. However, the final month of 2025 saw a slight decline in stock values. This suggests a period of consolidation as investors assess new risks. The Federal Reserve has been active in managing economic stability. In late 2025, the central bank reduced interest rates at 3 consecutive meetings. This was a response to signs of a slowing labor market. The unemployment rate reached 4.6% in late 2024, which was a 4-year high. Inflation remains a factor in policy decisions. While it has moderated, it is still above the 2% target set by the Fed. The return to a normal government reporting schedule is also notable. A previous 43-day government shutdown had delayed many economic reports in 2025. Now, the market is receiving data on a regular cycle once again. This consistency allows for more accurate forecasting. Geopolitical developments in oil-producing regions can impact household finances. Energy costs are a primary driver of transportation and heating expenses. When governance in a country like Venezuela changes, it can create volatility in oil futures. For the average consumer, this may lead to fluctuations in prices at the pump. It can also influence the cost of goods that require significant shipping. Regarding jobs and wages, the upcoming employment data is a key indicator. A weaker than expected report may suggest a slowing economy. This can impact consumer confidence and spending habits. If payroll growth remains modest, it confirms the trend observed by the Federal Reserve. This trend was the basis for recent interest rate cuts. Lower interest rates generally reduce the cost of borrowing for households. This includes mortgages, auto loans, and credit card debt. However, the pace of future rate cuts is currently a subject of debate. For businesses, the start of the earnings season provides a look at corporate health. Companies are currently trading at high valuations. This means investors expect strong profit growth. If earnings do not meet these expectations, it can lead to market adjustments. Businesses are also monitoring potential changes in tariff policy. Tariffs can change the cost of imported raw materials and finished goods. This affects the profit margins of manufacturers and retailers. Savings and debt are also influenced by the Federal Reserve's path. While lower rates help borrowers, they can reduce the returns on savings accounts. Investors are balancing these factors as they allocate capital for the new year. The 50% chance of a rate cut in March, as suggested by futures markets, indicates a cautious outlook. Overall, the combination of international events and domestic data creates a complex environment for financial planning. Market strategists are focused on several specific indicators. The January 9 employment report is the most immediate priority. Experts will look for the total number of new jobs and the labor participation rate. They will also analyze wage growth figures within that report. On January 13th, the Consumer Price Index will provide data on inflation. This will show whether price increases are continuing to slow down. Another area of focus is the U.S. Supreme Court. A decision on tariffs will clarify the trade environment for the coming year. Analysts are also watching for the formal nomination of the next Federal Reserve chair. This individual will lead the central bank's efforts to balance inflation and employment. In the energy sector, observers are tracking the operational status of Venezuelan oil facilities. Any updates on production levels will be significant. Finally, the earnings reports from major banks will be analyzed. These reports often serve as a bellwether for the broader economy. They provide insight into loan demand and the financial health of consumers. For the general public, these developments highlight the interconnected nature of the global economy. International events can have domestic effects through energy markets and trade policy. The health of the labor market remains a central factor in the overall economic outlook. Changes in interest rates continue to affect the cost of living and the return on investments. Viewers may find it useful to monitor official data releases. The Bureau of Labor Statistics and the Federal Reserve provide the primary data used for these analyses. Understanding that markets often go through periods of uncertainty at the start of a year is also helpful. The transition into 2026 involves navigating new geopolitical realities. It also involves assessing the long-term impact of previous fiscal policies. Staying informed on these structural shifts can provide a clearer picture of the financial environment. This section serves as a pacing buffer for the technical editing process. The information discussed in this report is based on current data from early 2026. The financial markets are open and active as they process the news from the weekend. Trading volumes typically increase during the first full week of the year. This increase in volume can lead to higher price discovery. It is a standard part of the annual market cycle. Many investment firms are rebalancing their portfolios during this time. They are considering the growth seen in 2025 against the risks of 2026. This rebalancing is a technical process that occurs every year. It involves selling some assets and buying others to maintain a desired risk level. We continue to observe these movements with a focus on verified facts. The data provided by government agencies remains the gold standard for economic analysis. Consistency in reporting allows for better historical comparisons. As more data becomes available, the outlook for the year will become more defined. Thank you for watching VeriScope News. Our goal is to provide clear context and verified information. We focus on the facts that shape our world. We avoid sensationalism to maintain a professional standard. For more neutral analysis, consider following our future reports. This concludes our look at the global and economic outlook for early 2026.